This week's episode is brought to you by Capital Financial Advisory Group for all your retirement needs.
Hey everyone, it's Coach Pete with Mr. Greg Berrien. This week on the Financial Safari, we have a very exciting show. Now, I think all our shows are exciting, but this one is very exciting. We've got our Medicare Cheat Sheet guidebook. We also have our box set on Medicare, taking those 500, 600, 700 pages of government documents all dealing with Medicare and boiling it down to easy to understand information. We've got a DVD and a workbook and guidebook to go along with that. People love the Medicare Cheat Sheet. We've also got a fascinating story about how someone was taken advantage of in the financial world. That much more this week on the Financial Safari.
Broadcasting from coast to coast, it's the Financial Safari with your host, Coach Pete D'Arruda. You'll hear from some of the nation's top financial professionals. So stick around and find out how to make it through the jungle of the financial world, right here on the Financial Safari.
Well, folks, again, Pete D'Arruda, Coach Pete, with Mr. Greg Berrien. Now, Greg works with us all through North Carolina. Greg is, in my opinion, for me, he's my Medicare expert. Greg, and Social Security expert as well. How you doing?
I'm doing well, Coach. How are you today?
Spend a lot of time in the Wilmington area, don't you?
Oh, I love it.
Yeah. We've got an office in Landfall, folks. Have you ever been to Landfall? Very nice place there.
Beautiful.
Very nice place. Now, I don't think we're going to be able to cover everything this week. Okay, I really don't, because when we talk about Medicare, there's a lot of different decisions. There's a lot of information. We've boiled it down to like 40 pages in this workbook and the guidebook, and then we also explained it on a series, a DVD series here for more advanced detail. This is a box set. It's got a $300 value. We're going to offer this away in the show as well. And let's start with this. I mean, is Medicare a complex subject?
Yes and no.
Yeah.
If it's broken down in a very simple, basic structure, it's not complex.
Yeah.
But if you open up the book that the federal government gives you, your eyes roll to the back of the head, and you go, I don't know what this is.
I used to keep a copy next to my bed. Go to
For
sleep after
insomnia.
half a page.
And you know what the amazing thing is, Coach? In this book, like it's 30 pages long, but
Yep.
the first 13 pages
Yep.
explains everything.
Yep.
In a very, very basic manner.
So why isn't it just 13 pages, Greg?
Because, all right. I had the last 17 pages for folks that really want to get nerded out. Okay.
Well, no, we're just joking, folks. There's a lot of information, and actually, I was amazed that we were able to boil it down this much. When you talk about 300 to 400 pages from the government, which are complex,
Yep.
and able to simplicize it, and that's a word I've just invented there, make it simple. Simplicize?
It works for me.
That's right. We made it simple, folks, and you never know what I'm going to invent, Greg. Now, let's talk about this. I'm going to ask you some questions here.
Sure,
We're going to
fire
go
away.
through it. I'm going to play devil's advocate as much as possible here, because
Please
I
do.
think everyone out there knows what a complex subject this is. And then we're talking about Medicare, but then there's also Medicaid, and then there's Medicare Advantage, and then there's a prescription drug plan. And all these work together because you have to choose these at the right time.
Oh, exactly.
All right, so first of all, getting started, what age, someone's watching right now, what age should they be to really be concerned about this?
Well, Medicare starts for most folks.
Yeah,
at the age of 65.
Right.
People who are on SSD, Social Security Disability,
Right.
24 months after they start that, they can get Medicare even though they're not 65 years old.
Okay.
But for most folks, it is 65.
65 is the magic number. That's what everyone's heard. It used to be the magic number for Social Security, too, but that's changed a little bit.
Well,
Let's talk about
67
that.
now.
Different show there.
Yeah.
Yep. Okay, so 62,
62.
the best age to start at least getting familiar with what's going on.
Yeah.
Okay.
Start paying attention.
Yeah.
Start pulling the information in.
You know, I'm 54, almost 55. I've already started getting mailers.
No.
To invite me to steak dinners to learn about Social Security and Medicare and all that. I was say, wait a minute now, they're cheating me about 10 years of my life.
Get that free steak dinner.
I don't want a steak dinner. You ever gone to a timeshare presentation?
Oh, yeah.
Well, I don't want a steak dinner.
You get shaken down.
Talk about getting beat up.
Oh, Lord.
All right, so getting started around age 62, what should somebody have on their mind, or what should they have? What kind of documents do they need, or do they need anything to start the research process for Medicare?
Well, actually, I'm going to brag. I'm going to brag. Is that all right, man?
You should. You did a real good job on this.
Yesterday, over here in Raleigh, I had some clients sitting down, and they already looked at this book,
Yep.
and he said this was the best book he's ever seen.
It's a good book. Well,
Yeah, and I went, thank you.
We had a good teacher, the government.
Yeah.
We just took the government's words and made them less.
And
made
also
them more understandable.
Thomas did help write this book as well. So Thomas's great
Thomas,
work
one of
is
our
on
producers.
here.
Yeah,
Oh yeah,
And
awesome.
you consulted with me on it. I looked at some of the stuff and I said, yeah, that looks good. Hey, when I get there, I'm going to use this too. Hopefully everything will be there. Now, the fork in the road, we call it. And what is the fork in the road when we're talking about Medicare?
That's the decision of which way you want to go. Basically, what that fork in the road is you can go the way of going Medicare Advantage, or you can go with a Medicare supplement. And very often it depends. There's a couple different variables involved in there of which way you want to go. Number one, if you have some serious pre-existing conditions when you're approaching them, you would definitely want to go to a Medicare supplement.
Medicare supplement.
Because the reason being is because during that, what's referred to as the initial enrollment period.
Which is how long?
The 3 months before the month of your birthday, the month of your birthday, and 3 months after.
Okay, so folks, very important. So it's a 7-month donut around the center, which is your age that you turn that age.
Precisely. And so during that period of time, it's a guaranteed issue.
Okay, guaranteed issue, very important, folks, because if you have those pre-existing conditions, it doesn't matter.
Right.
If you wait 7 months and 1 day,
then you have to qualify and you will never get it.
okay, so what would somebody do if they...
Then they would go towards a Medicare Advantage plan.
Advantage plan, okay.
And an old friend of mine once said is on Medicare you can pay now or you can pay later. A Medicare supplement, what that does is Medicare, of course, is composed of 4 different components. You have your A, which is for the hospital.
Yep.
You have your B, which is for your doctors. C, which is considered the Medicare Advantage, and D, which is the pharmacy plan.
Now, let's clear something up. There is no E that pays for your lifetime long-term care.
No, there's no E for
A
everything.
lot of people think that, though. Hey, Medicare, Medicaid's going to take care of me.
I mean, give them time. Maybe they'll come up with an E, too. Who knows?
Now, Medicaid may take care of somebody. That means you can't afford to pay for yourself, and then the government decides where they're going to put you. I don't think I'd want them to decide.
Oh, that's a frightening thought.
That's pretty thought. Okay, so the fork in the road, we get there. We're looking around. We're within that category of the age, within 7 months of that magic number. Right. What should somebody be paying attention to besides pre-existing conditions? Okay. Now, here's another point. What would you consider a pre-existing condition they really need to be paying attention to?
Cancer, stroke, heart attack, kidney, liver, anything to the effect that will prevent you from being able to get it in the future.
It's amazing how many things can go wrong with our body, isn't it?
Oh,
it's amazing everything goes right.
Yeah. There's a lot of working parts there, Coach.
Oh, gosh. So the fork in the road, we need to make sure that we then are very familiar with this before we get there, right? Because you don't want to wait till the day before your 7 months is up to try to call us and say, can I get a copy of that book?
No. But here's the thing, Coach, is what we have to really pay attention to. Number one is how much money, what kind of assets are they working with? If somebody's barely making it, I'm never going to put them into a Medicare supplement because it's extra money.
Okay,
I mean, it is the Cadillac. It's the best of the best.
Because that's money out of your pocket.
Right, because what that supplement's paying for is that 20% that the Medicare does not pay.
And that can add up.
It adds up.
It adds up big time.
So on a Plan G, your max out of pocket for the entire year is only $200.
You know why I call it Plan G?
Why?
Plan good.
Plan good.
It's a good plan right there.
Oh, it's the best of the best.
Yeah. But you pay for it.
But you're paying. It'll be like an extra $120 a month. Where for most folks, Medicare, if you cannot afford that extra money, we put them into a Medicare Advantage plan, and there's a lot of great advantages to Medicare Advantage plan because it's kind of like an umbrella in which everything is underneath it. You got your A, you got your B, and you got your D.
Okay.
And very often, depending on how large the county is and how big it is, where you live, it'll actually be a zero premium.
So it's county-based, folks, and that's important to know. And so, Greg, we're gonna dive back into this. We've got a break coming up. I just want to make sure you know out there in TV land that this is available to you right now. All you have to do is call the number you see on the screen. You can visit the website on the screen, and we can get in touch with you and give you a golden ticket. Now, you can get this book, the Medicare Cheat Sheet Guidebook Series. It's got a DVD, a workbook in there, also a golden ticket to put together your very own personalized and customized lifetime retirement plan with income for life, and that's very important. When we come back, we're going to talk more about this.
Memories with Grandpa.
My first job.
My fourth job.
Crazy road trips.
Our first date. Meeting our son.
Exploring our world.
Our world. Family and friends. Our special song.
Secure your retirement by meeting with a financial advisor.
It really does take the worry out of living in retirement if you get a true income plan built into your total plan. And that's why we try to future-proof your portfolio. Look at what you want to do in the future. Make sure you have protected money, protected from inflation, protected from risk and taxation, to make sure that you get that income all the way through retirement so you can do what you want to do. Because that's what retirement's all about.
Do you know how much you're paying in fees or commissions with your current plan or advisor? What about unnecessary risk or future tax implications? Sit down with a fiduciary advisor who can help you understand important retirement concepts, and so you can make the best decisions for yourself moving forward. We may even be able to answer questions you didn't even know needed to be asked.
Welcome back into the Financial Safari. Again, Coach Pete right here, Mr. Greg Berrien right over there. Greg, we had a fascinating first segment of the show talking about the Medicare Cheat Sheet. We're going to talk more about that here in this section of the show. We're going to finish it out in the third section of the show. I just want folks to know at any time you can call the number you see on the screen and get an appointment to make sure that you are on the right path. No cost or obligation, but more importantly, you can get your hands on the Medicare Cheat Sheet guidebook. And folks, if you have a DVD player at home, you'll want to get the box set. It's a $300 value. It's no cost since you're watching. Inside here is a DVD, a workbook, a guidebook, worksheets, and a golden ticket for your very own total retirement plan. Now, when we talk about retirement planning, it does involve making the right decisions for Social Security, for Medicare, Medicaid, all the different things, all the different financial objects you have and objectives you have. But more importantly, Greg, we need to make sure we have lifetime income we can't outlive. And you ran into a situation this week that I really wanted to talk about here on the show because it was disturbing to me.
I never thought I would. Coach, when I heard this story, you could have peeled me off the ground. I was amazed by it.
Yeah.
Yeah, it's crazy. I was in Wilmington.
Right.
Nice couple from Wilmington.
Yep.
And very often people come in, and we do our financial analysis. We look for those termites. That you
Financial termites, man, they're all over the place.
Oh.
And unidentified financial objects, UFOs.
Oh, man.
And this was a UFO to these folks because they didn't understand, did they?
Oh.
Folks, UFOs are everywhere right now in the financial world. You're buying things you don't know, or maybe you're told one thing and they put you in somewhere else. It's very important, it's vitally important to get a review to make sure things aren't happening bad, and you're going to see why in a minute. Greg, you met with a nice couple. You were helping them with an analysis. They spread out everything they had financially on the table, and you were helping them whittle it down and trying to make sure they had red, green, yellow kind of accounts. What happened next?
Well, these weren't financial termites, Coach. This is a financial buzzsaw. Okay, this was a
Financial
chainsaw. Okay.
Yeah, so it was a disintegrator.
So anyhow, it was a variable annuity.
Okay. Now, variable annuities, folks, let's talk about this for a minute, because I wrote about this in my book, The Fine Print Fiasco, about 15 years ago, still relevant today. And the subtitle of the book was What They Don't Want You to Know When You Buy, Borrow, and Invest. Guess what these people had done? They had invested with someone they trusted. I think they met in a civic group or a church, and it was a trusted person. What did that trusted person do to these folks?
Well, it put them into this variable annuity.
Variable annuity. Again, not to be confused. Sorry, Craig.
No.
Here goes Coach Pete again. Not to be confused with some of the other annuities out there that are beneficial. Variable annuities, your money can go up and down, and they hide a lot of fees in there, folks, but they can't hide them from Greg, can they?
And one thing they like to do is you call up and say, what kind of fees am I paying?
Yeah, all right, so here's what Greg said. Now, he was meeting with the people, and they were trying to, the statement didn't really show much. It had a lot of ambiguity on there. So what Greg did is he got on the phone and called the company, and we have a set of questions we ask the company. We speak to the compliance department of the company, not the sales department. The compliance department will tell you the truth.
That's right, but you got to press it.
Now let's go through this. I know I jumped ahead, but I want to make sure folks are not blanketly saying all annuities are bad. And maybe there's some good variable annuities. I haven't found one yet, but maybe there are. I've found some better annuity options out there that give you consistent, persistent, and reliable growth, protection, and lifetime income. But now let's go back there. You're meeting with them. You realize that there was a deficiency, sort of like a butterfly with the nice little marking, the little target on its wing. You know, that's where now you said this is a target because this is not good for these folks. We need to eliminate this. What got your attention on that?
Well, first of all, I told him, I said, I'm looking at the variable, and I said, very often these have higher fees, but I won't know what they are because I don't make any judgments. I don't make any blanket judgments. We don't do that.
No.
And I said, in order to find out, generally people are paying 3.5% to 4%.
A year on your balance in a variable annuity.
Which is also subject to loss.
Well, yeah. Now, but you know, you got me on that. But 3 or 4% a year.
A year.
So if you earn 10%, you really only earned 7 or 6% because the other 3 or 4% went right out the window into the broker's pocket.
Exactly. And if the market goes down,
well, if the market goes down, that's a double whammy. But let's just say, let's just in a vacuum where the market didn't do anything or did something. Yeah. All right. So now what happened? You called the company because you realized that didn't look right. Something wasn't right on there.
So the first one, she says, "Oh, you know, your M&E, which is."
See, we're using all these terms, folks. M&E is marketing and expense.
Right.
Or whatever else they call it.
And that's pretty consistent.
You're paying a standard fee. They call it M&E. You don't even know what it is. Yeah. It could be anything they want it to be.
Right.
What was their M&E fee? Well, now, was that M&E fee on the statement?
No.
Okay, so what was that M&E fee?
It was about 1%. It was 95 basis points.
A year.
Yeah,
See, it's bad enough if it was one time and then done. That'd be okay. But every single year they're paying that, regardless of what their balance goes up or down. They're still paying that fee. Okay, so 1% was the M&E fee.
And then there was one fee, which is a $50 charge, which is per year, which is no big deal.
Probably to mail the statement to them.
Really, to answer the phone. You know? And then there was another fee for a rider, and that was 1%.
Now, what was the rider?
It was an income rider.
Okay, so one and one, then we now we're up to 2% fees. Okay,
and then all of a sudden, and she goes, "Oh yes," and hold on a second.
This is you're talking.
Yeah,
you're on the phone.
I'm on the phone with her.
Yeah, well, hold the phone up to you.
She goes, hold on a second.
You got to hold the phone up to your. Okay, yes.
Okay, here I'm on the phone.
Yeah, you were on the speakerphone a minute ago.
Can you hold on a moment? I went. Sure.
This was a company.
Yeah, and I'm pressing.
So
I'm pressing.
She was feeling,
what else is there?
She was feeling what Greg was shoveling over there. He had the shovel of truth out.
Oh yeah.
You're trying to clear a path for the truth right now. Yeah.
And she goes, "I'll be right back." And
where'd she go?
We're looking at each other.
It was her break time.
Yeah.
She had to get coffee and a donut.
So she comes back. She says, "Yeah, there is one more fee there."
Oh, just one more fee.
Just one more. It wasn't much more.
Yeah, just one.
5%.
Wait.
What? Yeah, 5%.
A year.
A year.
All right, folks. 1 and 1 is 2, plus 5 is 7. 7% a year.
A year.
On their variable annuity. They were paying in fees.
I've never.
Not return, folks. Fees. The return. Well, that's what the broker was still shoveling in. So 7% in fees. So in that kind of case, you would have to earn 14% just to earn 7%, because 7 would go out the door in fees. Every single year.
It blew me away.
Now, chances are they probably weren't earning 7 or 8 or 9 or 10% every year, were they?
No. Oh, so what is on the statement was it was $40,000 that they put in.
They put in $40,000. Okay.
And they made $7,000 over 7 years.
So in 7 years, they put $40,000 in 7 years. Their balance is what, $47,000?
$47,000.
Okay. How much in fees did they pay over those 7 years?
$21,000.
So they earned 7%. And the company earned $21,000.
Who's getting rich,
so
Coach?
$7,000, $21,000. Which one do you want?
The lady goes to me. I swear, she goes, "Greg, I feel like I've just gotten in a car accident."
Yeah, well, you were the airbag at least coming out and helping around.
And I said, "I'm really sorry about this, but here's what we can do." Fortunately, it was out of surrender. And I said, "We're going to take care of this today."
Yeah.
And she said, "Please."
Folks, get out your statements if you have any kind of annuity. I think any kind of annuity, because there's a lot of bad annuities on every side of the equation. But we're a fiduciary firm. We're an independent financial fiduciary firm, which means we have access to almost anything that's out there. But we do know what to ask companies. Greg, if they didn't meet you, they were going to continue to overpay on fees. The only person they were helping out was the company. They weren't making any money on that.
Right.
Folks, if you have any type of financial question like this, and it's important to, well, were they happy with your answer? I mean, were they happy? They weren't happy with your answer, but they were happy you helped them, I guess.
They love me.
Well, why wouldn't they?
Oh, yeah.
But they should hate. It's a love-hate kind of thing.
Yeah.
Hate somebody with that kind of. I was baffled with this, folks. I'd never heard one this bad. And it's a big institution they're with, by the way. Big institution, big sales institution that offers a lot of variable annuities that we think are junk. So if you want to make sure you're in the right place, all you have to do is call the number you see on the screen, no cost or obligation.
Take the mystery out of financial planning by mapping out where you are now. Discover how much you're actually paying in fees and commissions. We'll perform a tax analysis to reveal how you could possibly reduce your taxes. We'll even run a customized income plan, utilizing proven strategies and techniques which can turbocharge your retirement income. That's a comprehensive financial review, complimentary with no obligation. Call 888-910-8265, 888-910-8265, or text BREEZE to 21,000.
Hey, you know the market's going up. We really should put more of that retirement money into the market, not those stupid safety accounts. Now listen, you're getting closer to retirement. You need to be less risky with your money, not more. But think of all the money out. you could make in the open market today. You want guaranteed retirement money, not what-if retirement money. Oh, you are just so divine. And you want advice from a certified fiduciary, and not this clown.
Help take the devil out of the equation. Call now and schedule your free no-obligation consultation today.
Folks, welcome back into the Financial Safari. Of course, Coach Pete right here, Mr. Greg Berrien right there. Greg, I am still, during the break, I was just baffled. That somebody could get away with or feel good about putting somebody who had $40,000. They got more than that in other places, I would hope. But still, taking someone's $40,000, jamming it into a variable annuity that had fees of 7% per year, and then over 7 years, the nice people only earned $7,000. The variable annuity company earned $21,000, of which many of that, or some of that, probably went in commissions to the guy who sold them.
Oh, yeah.
Embarrassing, folks. That's half, more than half, of the original investment was made in commissions and expenses by this variable annuity company. That is embarrassing for the financial industry. We've never had a complaint in 30 years, but I'm going to apologize for the financial industry for that. That is crazy. I'm so happy they met you. You need to go next time when you go down there. You need to be wearing a white hat.
It was kind of funny, as I met with her husband first, and she goes, I really didn't want to come in, but Steve says, you got to meet this guy. He's a really nice guy. You got to meet this guy. You're going to like him. She goes, all right, I'll go.
He's got donuts.
And she goes, boy, am I glad I came in.
Well, I know. Life throws a lot at us, and we all get busy, and then there's certain things on your to-do list that end up falling down, and many times they're the ones that they should be propping up. Yeah. And I know, as financial people, we're not high on the list. Many times, right?
Yeah.
The doctor never gets postponed.
No.
Dentist never gets postponed.
Well, I do.
What are you going to do with Greg? Well, put Greg in the closet. We'll see him next time. Or we'll see him, if the market falls, we'll contact him. Why wait? We know it's going to go up and down, and the best time to lock in gains is when you have gains.
Yeah, exactly.
Somebody said one time, Coach, they had a big gain in the stock market. Coach, I don't want to pay any taxes. I don't want to pay capital gains taxes. I have too much of a gain. I said, so let me get this right. Let me get this straight. You're going to wait till the market goes down to liquidate, therefore you won't have to worry about paying taxes. So I always say I'd rather pay taxes on gains than have write-off on losses.
Bingo, huh?
It made sense to them. They finally kicked in. All right, so I could spend, folks, I really could. I could spend hours on the subject we were talking about, on how the people had the wool pulled over their eyes, and I'm so happy you were able to uncover the financial termites, and this UFO, unidentified financial object that was out there. But let's spend a little more, the final minutes we have, the final 6 or so minutes we have on the show, talking about the Medicare cheat sheet, because we've got so many calls on this, and I want to make sure people get their hands on this.
Yep.
And we also have the box set that has the workbook, guidebook. It also has a DVD and worksheets in there, and a golden ticket. Now, the golden ticket will enable you to have what Greg did for those folks, a full analysis of your current financial and retirement plan, and then directions and recommendations to customize a plan that fits you without any dirty tricks. And we can identify those dirty tricks a lot of times by doing forensic MRIs on the portfolio, identifying things you might not see or might not know how to identify to begin with. All right, so Medicare cheat sheet. We talked about how to get started, the different choices that are available out there, and we can go into more detail if you call. We are more than happy to take time out of our schedule to help you to make sure you make that right decision for Medicare. Greg, there's one important thing there, the 7-month period. Explain that before we move on.
Yeah, so you have that 7-month period, the 3 months before, the month of your birthday, and 3 months after when you turn 65.
65. And so that's the most important time.
That's a critical time, exactly.
And so understanding original Medicare we talk about in this booklet. Do you want to go over a quick summary of what that chapter entails?
Yeah, absolutely. Original Medicare basically is a Part A and B that pays 80% of your bills.
Okay.
But it does not pay that last 20%.
So that's why we need the supplement or the Medicare Advantage plan.
Yeah, well, exactly.
Right.
The supplement pays the 20%. The Advantage plan is a complete, it's almost like a PPO or an HMO.
Yeah, but the problem now, all right, so if something's too good to be true, like that Medicare Advantage sounds too good to be true for me. It's all paid for, so why would I pay money to have a Medicare supplement?
That's a great question. That's a great question. Okay. Well, first of all,
Yeah.
most people like the Plan G, so your max amount of pocket on a Plan G is only $200.
Which Coach Pete calls what? The good plan.
The good plan.
Plan G for good. No, that makes a lot of sense. It makes a lot of sense.
However, on a Medicare Advantage plan, depending on the kind of plan, your max amount of pocket could be anywhere from $5,200 to $7,300 a year.
Okay, max.
Max.
Okay, so
so
you're not
if
gonna
something
pay
goes
another.
wrong,
Yep.
you're out. You're
So
serious
you
money.
basically self-fund that extra.
Yeah, precisely.
Okay, yeah. So you're paying to prevent the catastrophic expenses. That's what
And,
it is.
interestingly enough, even in Medicare, fewer than 1% of people all ever reach that maximum out of pocket.
Do you see a lot of folks who don't have a Medicare Advantage or Medicare Supplement? Like nothing? They're just depending on
Very
Medicare?
rarely do
Yeah.
do I encounter that. Very, very rarely. What I do is I always do an assessment to see where they're at. Of course, on a Medicare Advantage plan, you can only make changes during the annual enrollment period, which is in the fall.
Okay, okay. And now we only have a couple more minutes on the show, but I wanted to talk about the prescription drug plan because a lot of people have made so many mistakes on on this over the years of when to sign up or not signing up in time, and it costs more money. This is really one that is punitive if you don't make the decision on the right time.
That's critical, Coach.
Yep.
That is absolutely critical. I once ran a prescription drug plan for a gentleman, and what he was going to pay for his drugs, depending on the plan we picked,
Right.
ranged from $6,000 to $86,000.
Wow, that's a big difference there.
So that's why if your agent or advisor is not running your medications through the Medicare website, they are doing you a severe disservice.
I've heard stories before where I said, well, why did you get this prescription D plan, or why did you get this plan in the prescription drug plan? Well, that's what my agent sold me. I said, but none of the medications you're on are really qualified here. So your advisor should sit down before signing you up for anything, should ask you what kind of medications you're taking, put it into the database, and it recommends which plans are best for you there, right?
And here's another thing also, Coach. All formularies are very different from Medicare Advantage plans all the way to Part D standalones. And I've had a couple cases, one in which a person had stage 4 lung cancer and one had Parkinson's, advanced Parkinson's. Going in, they were in that initial enrollment period, and of course I ran all their drugs through there. And the son of a gun, I was shocked, but I ended up putting them in a Medicare Advantage plan, even though they were sick, because the formularies on those particular plans crushed any standalone D plan that existed.
Well, makes a lot of sense. Now, we talk about pre-existing conditions in the health world, the health insurance world, and even when we're talking about it in the Medicare and Medicare Advantage plans. What about the prescription D plan? Are there pre-existing conditions on some of these policies, like they won't let you have that medication if you're already taking it, or anything like that?
Well, some medications are not included, and if what will happen is your doctor can make a request that you can get that, or they'll look for a generic. So if a generic doesn't work, so you just basically have to apply for it, which is why every year you want to take a look at everything that you have. And interestingly enough, the Medicare website, believe it or not, is actually pretty good.
Yeah, well, it is. It is.
It's pretty good.
It just needs a little bit of translation every now and then.
Exactly. It needs somebody to guide you through there and put all the medications in there, do it accurately, and then what it'll do is it'll rank everything top to bottom.
Doesn't have to be complex, it doesn't have to be scary, and it's more important than ever to have a guide on your side. And folks, that's why we make this offer every single week. If you call and you're one of the next 20 people who call as we leave for the week, I've written 7 books. You'll get to pick 3 of the books, a 3-book set, the box set, again, on the Medicare, the Medicare Cheat Sheet box set, which is very, very important. Boxes full of DVDs and workbooks and guidebooks. All you have to do is call the number you see on the screen. There'll be no cost and no obligation. Coach Pete, Greg Berrien, see you next week.